The topic of lesson 6 is reversal crown formation. We'll be learning how to use crown formation to spot a trend reversal and trading the trend reversal ahead of the crowd. A trend changer is crown formation. Crown formation is a very reliable trend changer. King's crown reversal pattern. According to Newton's law of gravity, what goes up must come down. This is also applicable to any financial market because a trend will not continue till eternity. It will get to a point when it reverses. King's crown is a very reliable chart pattern that reverses the trend from bullish to bearish and vice versa. It is also known as head and shoulder pattern. We can see the head, the left shoulder and the right shoulder. Why is it called King's crown? It is called King's crown because it looks like a crown as adorned by kings. The chart above, the chart as seen on the screen, is a good example of King's crown. The trend was initially bearish, making lower low and lower high before the crown reversed it to a bullish trend, making higher high and higher low. Bullish crown formation structure. In this section we'll be looking at the structure, how price waves to change a trend from bearish to bullish. Bullish crown reverses the trend from bearish to bullish trend. It is also known as inverted head and shoulder. Now, looking at the illustration on the screen, it's obvious that the price was waving bearish from a low to lower high, lower low, lower high, lower low and lower high. That means the lower low is lower than the previous lower low. The lower high must be lower than the previous lower high. But all of a sudden, price rallied to a point H, that's a high, which is higher than the previous lower high. And at that point, the sequence lower high and lower low has been violated. At the point that price made a high, it formed a bullish impulsive wave. A bullish impulsive wave. And if you remember that price waves in A, B, C, D pattern. Now when price has made a high, it is expected that price will retrace to form a C, that's the higher low, and move higher than the previous high to form a higher high. At that point, the trend has changed from a bearish to a bullish trend. That is how trend changes. Once the last resistance, that's the lower high, is taken out, a good trader will be anticipating for a possible trend reversal. So a good trader will have been anticipating for a possible trend reversal from a bearish to bullish, and from that point price will be making a higher high and a higher low. Here is a chart example. Price was initially making a low, lower high and lower low. Then price rallied to a point H, a high, which is higher than the previous lower high, thereby violating that sequence. At that point, a good trader will be expecting that price will retrace to form a C or a higher low before trending bullish to higher high, thereby changing the trend from bearish to bullish. A bearish crown. A bearish crown changes the trend from bullish to bearish. Let's look at the structure as well. A bearish crown is a trend changer from bullish to bearish. That means in a bullish trend, price is making a high, higher low, higher high, higher low, higher high. That means that the previous higher low must be lower than the new higher low. So as price is making higher low and higher high, we are in a bullish trend. But price came down to form a low, which is lower than the higher low. It came, price dipped to a point L, that's a low, dip lower than the previous higher low, that's a support, thereby violating the higher low and the higher high sequence. At that point, a trader, a very good trader, should be anticipating for a possible trend reversal from bullish to bearish. A crown is just like taking a staircase up and coming down the staircase from the other side. Here is what it looks like on the chart. Price was making a high, a higher low, higher high, higher low, higher high. Price was trending bullish. But all of a sudden, what did we see? A dip, a price dip lower than the previous higher low, thereby violating the higher high and the higher low sequence. And price retraced to lower high, and then boom, price dip to form a lower low. And that is the sequence of trend changer from bullish to bearish. Spot the crown on the chart. It is expedient I test that there is a good understanding of this concept. If you are not able to spot the crown on the chart, I will advise you go back and watch the video over and over and get the concept of spotting a crown on the chart. Spot the crown on the chart. Here is a crown. We have a bearish crown. It changed that trend from a bullish to bearish trend. Spot the crown on the chart. Once you can understand the trend analysis, the change from lower low to lower high and lower high to lower low, you will not have problem spotting a crown. Here is the crown on the chart. This is a bullish crown. It changed the trend from bearish as seen on the chart to a bullish trend. Now in this section we'll be looking at trend line convergence in crown reversal chart pattern. Now this is an easier way of identifying or spotting a crown using trendline confluence. In a bearish crown, there are 4 steps of identifying and trading crown formation pattern with the help of trendline as given by the illustrations that we will see. There are 4 steps that needs to be taken to identify and trade a crown formation with the help of the trend line. The step 1, price was initially trading bouncing on the bullish trend line. The step 1 is trend line is broken. Step 1, trend line is broken. Price was initially trading bullish, bouncing on the trend line, and once the trend line is broken, that's the first step, the trend line is broken, price is no longer trading bullish. The trend line is broken, so that means most likely price will continue in the bearish direction. We have seen a switch from a bullish trend to a possible sell zone. Price has changed from a bullish zone to a bearish zone. Here is what it looks like on the chart. We can see that price was initially bouncing on the trend line, and then price broke that trend line, and you can see the beautiful bearish candle after the trend line was broken. Price broke the trend line. At that point, a good trader will be watching and looking at possible that price is changing direction from a buy zone to sell zone. Step 2, price took out support. The first step, price broke the trend line. At that point, we will be watching that, oh, what is price gonna do? The trend line is broken. What's the next thing? But here, price broke the trend line as it was initially stated, but this time it took out the support. That means price dipped below the previous support. At this point, a good trader will know that most likely the trend is changing because the support has been taken out. While the support is taken out, the bullish sequence has been violated. It has been violated. And this is what it looks like on the chart. Price dip below the last low as indicated by that mark, the red line, and that was the support on the chart. Price took out the last low, and that tells a good trader, an experienced trader, that wow, we are seeing a trend change. We are seeing a possible trend reversal. Step 3, a retest of a broken trend line. A retest of a broken trend line. When the support is taken out, price will retest the trend line. Price will retest the trend line, and that's the step 3 for making a bearish crown formation chart pattern. Here is the chart sample. The support is taken out and price is retracing towards the trend line. It's also important for us to note that the head can be called the center tip, the left shoulder as the left tip, the right shoulder as the right tip. Step 4. Bearish reversal candlestick pattern as confirmation for entry at the retest of the trend line. Now, once price has retraced to the trend line, retesting the trend line, at that point the trend line is acting as a resistance, and if price formed a reversal candlestick pattern like a bearish engulfing or a tweezer top, that would be a good confirmation for sell entry. At that point, a good trader will be thinking of shorting, selling the rally. Here is the chart sample. We'll see a bearish star as a confirmation for entry. Behold, a crown. After the entry, price dipped. Wow, that's amazing. It's good to sell shape. Price dipped and a crown is formed. In the same sequence as initially stated in the previous section, but with the trend line, is good for a visual aid. Price has changed from a bearish to bullish crown formation. There are 4 steps to be taken when identifying and trading a crown formation pattern with the help of trend line as illustrated below. Step 1. Price breaks the trend line as indicated on the chart. The trend line is broken. Here is a chart sample. Price broke the bearish trend line. Step 2. Price took out resistance. At this point, price has already broken the trend line, then it went beyond the previous resistance, thereby creating a bullish impulsive wave. So, price is telling a good trader that there is a possible trend reversal. Here is what it looks like on the chart. We can see how price took out the resistance on the chart. Step 3. Retest of a broken trend line. Step 3. Retest of a broken trend line. When the trend line is retested, the trend line will act as a good support, and we know from our previous lessons that support rejects price and make price to rally. So step 3, the trend line is retested. The broken trend line is retested. And here is the chart illustration. Price retest the broken trend line. Step 4. Look for a bullish candlestick reversal pattern as confirmation for entry. Once price is retesting the broken trend line, at that point a good trader will be looking forward to seeing a bullish candlestick reversal pattern for confirmation for entry for a bullish trade. And here is a chart illustration. When the trend line is retested, there is a bullish engulfing candlestick pattern, a bullish engulfing candlestick pattern, and that tells us that price is most likely gonna trade north. So we can see the left tip and the right tip forming. At that point, a good trader will initiate a buy position with the hope that price will rally. Behold, a crown is formed. After that bullish engulfing candlestick reversal pattern is formed, price rallied and the trend was changed from bearish to bullish